afternoon. Let's come back. Welcome back to the third part of chapter 3. Okay, we continue with preparing the sample statement of cash flows. For this, we go to the Excel, as I was mentioning in the last clip. Okay, let's go to the Excel file. Okay, and we can drag this to the left so that you can see the full screen. Right, okay, you can see here. Let me just push it up here. Alright. Now you can see the balance sheet. Okay, here you can see the balance sheet all the way down. Okay, this is the assets portion of the balance sheet, and then you have the liabilities and equity portion here. Okay, for 2 years, in 2018 as well as 2017. Okay, and below here you have the income statement. It starts with revenue and ends up with net income. Right, I don't think there is anything below that. Okay, oh yeah, you have dividends per share and retained earnings. Dividends, you have the total dividends and total retained earnings. It's also computed here. Alright, now in preparing the statement of cash flows, we go through this step by step, and then we will try and relate to the equation that we have seen or we have discussed in the previous clip. Right? Alright, the first step is actually to ignore the income statement. Okay, this step is not necessary, but I think it is good to go through this step in order to appreciate the full view of this preparation of the cash flow statement of cash flows. Alright, so the first step here, we ignore the income statement and we just look at the balance sheet. Okay, for every item here, every line item here, we just compute the difference. Okay, we take the value for 2018 minus the value for 2017. That's the first step. So for example, cash, 2018 it was 108 million, for 2017 it was 58 million. So the change, 108 minus 58 is 50. So it tells you that if it is 50 here, it means that this item, cash, has increased in the year 2018 compared to 2017 by the amount of $50 million. Okay, so that's what we do for all the other items as well. So you find that all the items here are positive. Okay, it means that there has been an increase in every asset item. Okay, all the asset item, including net fixed assets. There's been an increase in the year 2018. From 2017 it has gone up to 2018 for all the items. And then if you look at liabilities and equity, you find that for payables it has increased by a small amount, $4 million, but notes payable, there was a drop of $93 million. In 2017 it was $119 million, but in the year 2018 it has gone down to 26 million. So likewise, long-term debt, there is a drop, okay, from $1,091 million. That is $1.09 billion of long-term debt. It has been reduced to 843. So a reduction. So you have negative here and negative here. It shows that these two items, notes payable and long-term debt, the company has reduced its notes payable and long-term debt by a significant or substantial amount in the year 2018. Okay, but you find that common equity, it has also gone up by 601 million. Okay, the thing that you need to note here, okay, is to compute the total change in assets and the total change in liabilities and equity. Okay, when you take the total change in assets is 533 million. It means compared to 2017, in 2018, the asset items has increased by $573 million. Okay, likewise, if you look at the total for liabilities and equity, you find that you add all this, you also should get 573 million. It cannot be any other sum. It must be the same as here. Okay, these two must be equal. Remember the equation? change in asset must be equal to change in liabilities plus change in equity. Yeah, so that's what this shows. Okay, that's the first step. It is not crucial to go through the first step, okay, but it is useful, yeah, so that you appreciate that this change, yeah, this statement of cash flows, okay, is actually systematized, yeah, or in a framework. It's this change in cash flow is provided in a particular framework, and that framework is dependent on this change in assets being equal to change in liabilities plus change in equity. Alright, that's the first step. Then what we do is we expand this to show the next step here. Alright, the next step would be to categorize each change, okay, each one as whether as a use of cash or a source of cash. Right, so that's the second step. The first step is to compute the difference in each item, okay, for both the assets portion and the liabilities and equity portion. Then you compute the total, okay, and this total must be equal to this total here, yeah, it cannot be any different, okay. Right, that is the first step. The second step is to categorize, yeah, group them, yeah, this change you categorize into a use or a source of cash, yeah. For example, the first item, cash, yeah, you ignore this for the moment. We'll come back to this later. But let's look at receivables, yeah. Receivables has gone up by 164 million. So is that a use or a source of cash? Remember the principle that we have seen in the previous slide? If it is an asset item and it goes up, it means it is a use of cash. Yeah? Cash has been used because cash has been converted into receivables. Yeah, there is more receivables now, that means more cash is tied up as receivables. Therefore, this 164 is actually a use of cash. Okay, so you categorize that as a use. Likewise, all asset items that are positive, okay, positive here means increase in these asset items, will be a use of cash. That is why these are all uses. Can you see that? This is a use, this is a use, this is also a use, okay, and this is also a use, yeah. So an increase in any of the asset items, yeah, right? These are all positive, yeah, therefore there is an increase in these asset items, therefore these are all uses of cash. Alright, now let's go to payables and the liabilities and equity portion. When payables go up, it means that the company issues, yeah, a new liability, and therefore they obtain cash. Yeah? In this case, payables, therefore they conserve cash. They owe more to their suppliers now compared to previously by about 4 million more. Yeah, that means they conserve $4 million. Okay, therefore it is a source of cash. Yeah? Because they conserve the cash, it is a source of cash. Okay, therefore this is a source. Yeah. But notes, okay, it's a liability item, but because you reduce the liability, how do you reduce the liability? By paying cash to your creditors. Yeah, you pay them off. So you reduce your amount of debt from 119 million to 26 million because you pay 93 million to your creditors. Okay, therefore it is a use of cash. It's not a source. Yeah, remember the principle. If it is a liability or equity account, if the account decreases, yeah, therefore it is a use of cash. Yeah? You use cash to reduce the liability or equity account. Yeah, so that is what the case, yeah, is here. The case is a use of cash. Okay, this current liabilities, other current liabilities has gone up, so therefore it's a source of cash. Yeah, and long-term debt is also a use of cash, similar to notes payable. Yeah, it's also a use because it's a negative amount. Yeah, negative change. Yeah, a drop in the long-term debt. Common equity is a source. All right. So this is what because you issue new shares, new equity to your investors or shareholders, and therefore you receive cash. So this is a source of cash. All right. So that is the second step. Yeah, you ignore the cash here first for the moment. Okay, now what you do next is to actually total the sum, yeah, of all the uses of cash. So this is a use, 164 plus 140 plus 139 plus 80 here, then plus, ignore the negative sign, plus 93, okay, because it's also a use of cash, then plus 248, ignore the negative here. So that will be the total use, use sum is $864 million, okay, so this is computed here, use, so note this, it is a sum of all the uses, okay, ignoring the negative, so ignore the negative here because the negative indicates a change in the account balance. It does not indicate whether it's a cash inflow or a cash outflow, whether it's a use or a source, the use or a source is only here. So based on the use or a source in this column, you just take the absolute amount in the previous column, and then you add them. So you have here total, total use will be $864 million. Now the second step would be, okay, in the second step, the next step would be to compute the total of the sources of cash. That means 4 here plus 309 plus 601, because there's no source here, okay, these are all uses, so you just add these three, they are all the same sign, it just happens to be the same sign, therefore you can add them, ignore the sign, you can add them here. Okay, these are sources, you get the source, the sum of the source to be $914 million. Okay, and now note this, the source of cash, okay, this is the total source of cash, this is the total use of cash. The difference is actually the cash change, so 914 minus 864 is actually 50, which is the same here. It should be the same, it cannot be any other amount. If you have a different answer here from this, then you have made some computation error somewhere. Alright, now note this, in equilibrium, the total sum, or the total source of cash must be equal to the total use of cash. Here it is not equal because we have not added cash. Notice cash has not been added. So if you add this 50 as a use, okay, so this will increase the use total by 50, so this will be equal to 914. Can you see that? Okay, so the total sum, if you include cash, it will also be 914. It will be equal to the source of cash. Alright, that is why this is actually a use, but I put this as red, because this is something that we will decipher later, we will interpret this later. But it's also a use. Why? Because cash, here cash as an asset. If cash goes up by $50 million, this $50 million is actually a use of cash. Cash has been used to increase the level of cash as an asset. Therefore, it is a use of cash. Is that okay? Alright, we'll come back to this a bit later. Now, the next step would be, okay, this is step number 1, remember, this column, this is step number 1. Step number 2 is this, the E column here. Right, now step number 3 is the F column here, So for all these items, you have to categorize them. Just now we categorized them as either a use or a source of sum, except for cash. The next step would be to categorize them into the 3 activities. Remember the 3 activities? Whether it is an operating activity, an investment activity, or a financing activity. Alright, so here receivables and inventory are all operating, including other current assets. Okay, all current assets except for cash, here they are categorized as operating. Now fixed assets will be investment. Fixed assets will be investment, therefore you have an I here. Then payables is operating expenditure, or sorry, operating asset, operating liability. It's an operating liability, therefore we put that as O, operating. Likewise, other current liabilities will also be operating. But this, notes payable is financing, because it's a discretionary mode of financing. It is not automatic, it's not spontaneous. Likewise, long-term debt is financing, and common equity is also financing. Alright, so we have categorized all. We